Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. The BJP government seeks to revoke Article 370 and Article 35A of the Constitution, giving special powers to the State Assembly. Also wants to make Jammu and Kashmir a union territory and an assembly and Ladakh a separate union territory. Markets have recovered from the day's low but continue to trade with declines. The Nifty trades close to the 10,900 mark, down by over 1% in trade, and the volatility index jumps close to 10%. Reliance Industries is the biggest contributor on the Nifty downside after Credit Suisse downgraded the stock to underperform and also cut its price target. And Nifty IT is bucking the trend in today's day of trade. The index is the only sectoral gainer, with TCS leading the gains. Good afternoon, Neeraj. Some respite. We're off the day's low, but still deep in the red.
Yeah, and 2% down for the bank Nifty. I mean, we could all feel happy that we are slightly off from those lows, but still about 1.5% lower for the benchmark index and close to 600 points for the bank Nifty, so not out of the woods as yet. I just want to make a quick dive into what Europe is doing currently before we talk about our markets, because remember, in Friday's session, while the US markets were okay, Europe really had a bad day. And it'll be important to take stock of what FTSE CAC DAX are doing right now, well, deep gashes even right now. So the world markets are not a happy place. Very difficult to see our markets really have a runaway up move in a scenario like this. Strange things happen, but just it seems a bit difficult to digest. The India VIX has shot up too, I think up about 9 or 10% in the session today, 11.2%, so about 17 odd levels. Typically it hits that level of 20 from where there's probably a brief respite. For now, even that indication is off. Remember, off late, of course, the VIX also has failed to become a lead indicator of sorts. The levels down to 12, 13 did not evoke any kind of buying response either. Now, the heat map, and a lot of red, very little green, I would presume. Maybe better than morning, because in the morning we just had 2 or 3 stocks and none of them made a move over 0.5%. Now, we have some defensives, the likes of Bharti, Coal India, TCS, which are up almost 1.5%. Tech Mahindra too giving company. Don't quite see HCL Tech, okay, yeah, right here, ahead of the results day after tomorrow. That too is holding out okay. But aside of that, I mean, so you can see that there are some defensive heavyweights like HDFC, TCS, which are trading in the green and giving that support. But the quantum of losers is large and strong. Globally linked stocks, because of the PBOC move, I still believe that is the key determinant of what the how the markets will proceed, and all of those. So Tata Motors, JSW, Hindalco are down in trade. Reliance Industries, the Credit Suisse downgrade, more pain there. Z has just collapsed after the deal was announced, and that stock too down another 3%. So it's looking very choppy right now for the large caps. A quick dive into what the mid caps and small caps are doing as well in the session today. Not too materially different, but and again a lot of pain. And as you can see out here, I mean, the color of the losers, without exception really, most of them, future retail is down 5%, and then you go down lower, stocks are 8-9%. Compare that to the gainers, say for Bata, which is about maybe 3.5 to 4%. A lot of other stocks under some stress. Agro Finance, Prestige Estates, etc., looking slightly wobbly. At the broader end of the spectrum, the small cap space will come up on your screen very quickly, and that pocket too, the quantum of losers is fairly large. As you can see, Equitas, Himadri, Indiabulls Real Estate, etc., correcting viciously, save for Venky's and maybe Bombay Dyeing, which is a difficult stock to figure out. Most of the other stocks are just about okay. The good part is Care Ratings finally moves into the green, and Trident is reacting to its numbers very, very well. But I dare say today will be all about watching out for the Trump tweet, because I think once Donald Trump wakes up and takes to his Twitter account, that is the big thing that we will have to monitor. So do watch out for the Trump tweet in the session today. I think that's the single most determining factor about what the world markets could do. Not how the FNO markets set up.
Not good, Neeraj. In fact, we've seen a lot of build-up for the Bank Nifty futures today. Remember, the markets have been trending lower, but we've not seen any heavy build-up coming on the futures. So as you can see on your screen, the Bank Nifty futures open interest is up about 19%, and the index trades with cuts of about 2%, telling you that there are short positions being taken in today's trading session. For the Nifty, which is down almost 140 points, it in trade. It could be off the day's low. We also breached the mark of 10,800 today. And remember, 10,850 was the low that we saw on Friday. So some bit of buying, or recovery rather, not buying. That's not the right term to use for a market like today's, at least 7% higher. Premium continues to fall. It's right now about 20 points for the August futures. But important to see where the closing comes about today, whether we can manage to close around the current levels, because this was the mark which was defended even in Friday's session. Neeraj highlighted the volatility index. Remember, our markets have been underperforming the globe. So last week, VIX was up 25%, and today, because of a factor which has been witnessed for the global equities today, we've seen India volatility index also rising by almost 10 to 10.5%. What levels to watch out then? The base is moving lower, and if you look at the concentration, that's also very narrow. So the open interest distribution for this weekly expiry, maximum open interest on the put side currently is at 10,800 strike, whereas on the call side, major concentration, it is at the 11,000 strike. So probably that's the range you can watch out for. But the put writers continue to run for cover as the markets trend lower. We've seen unwinding for 10,900 and even the 10,950 strike, and call writing seen in today's trade at about 10,900 and 11,000 strike, adding between 14 to 19 lakh shares. In terms of stock futures, Bata is the one which is doing well, and that's owing to the numbers. It's reacted positively. In fact, on the cash side, the volumes are pretty high. If you can just pull up the AVAT function of Bloomberg, the white line is projecting today's volume vis-a-vis the average volume of last 20 trading sessions, telling you the stocks moving higher and good amount of volume on the cash side. That's a positive sign, by the way. And the stock, however, if you look at the trend, it's been trading below its 50 and 100-day moving average, but at day's high 4%, 20% higher when it comes to OI build-up, clearly telling you there are longs being built up, at least for stocks like Bata in today's trade. Equitas is the other one. Today's fall has come in because of the volume which we've seen on the cash side, because futures are not indicating any major short positions. So down 17% for the year, one of the top F&O losers also for the day. The volumes on the cash side, as I was highlighting, the white line is projecting today's volume, clearly telling you people who are holding shares of Equitas seems to be selling in today's trade. Berger Paints is the other one. Long position seen ahead of numbers today. Remember, Paint as a pack has been outperforming. The numbers from Asian Paints, Kansai and Nerolac has been good, and the stock's also trading very close to its 52-week high of 349.9. So some positive trends seen ahead of the numbers which come today. Long positions definitely seen on the future side as the open interest has surged about close to 15%, Neeraj.
Well, looking wobbly for the world markets. Let's begin this show with Global Market Opinion. David Riley of Blue Bay Asset Management joins us right now on the show. David, good morning to you. Thanks so much for taking the time out and speaking to us here at Bloomberg Quint.
Thank you.
This PBOC move, and whether it's accompanied by China stopping agri imports or no, is the second part. But first, want to squarely focus on this PBOC move on the yuan. How larger and how stretched out an implication do you think it can potentially have for financial markets?
Well, I do think that clearly it does have implications for global financial markets and will be an ongoing source of volatility. I think moving through the 7 is symbolically important. I still think the Chinese authorities, that Beijing will not want to lose control in terms of having very large devaluation of the yuan, but I think what it is sending two messages. One is that it's not going to passively sit by while the United States, under the leadership of President Trump, imposes additional tariffs. It will respond. And secondly, China does need to have easier policy. It needs to have easier monetary policy and financial conditions more generally. So I think the concern for global markets will be that this will actually escalate the trade tensions between the US and China, but also that China, and by extension the rest of Asia, will start exporting disinflation, even deflation, to the rest of the world, and the rest of the world is not well placed to deal with that, particularly Europe.
So the question, though, David, is that we've had the world markets stay reasonably stable in light of the to and fro that happened between US and China. Some days they were looking like resolving the situation. Some days they were looking like going down the drain. Now that PBOC has taken this move, crossed this line in the sand, maybe arguably levy some tariffs on agricultural imports, and if Donald Trump wakes up and realizes that this has happened and takes to Twitter, how bad do you think it can get for world markets? Because Europe was down 3% Friday, is down 2% as we speak.
Well, you're absolutely right to highlight that we do have a situation where, with China's response to the original escalation by President Trump when he announced tariffs of 10% on the remaining $300 billion worth of imports into the US from China, that both when he sees the move within the currency and also if there is trade actions by China as well, that his instinct so far has always been to double down. And of course, you need to remember that President Trump thinks that he's winning the trade war. He thinks that the US is in a much stronger position than China is. So he thinks that he has the leverage. In addition to that, I think one of the issues that's facing global markets and equity markets has been that there's been this tug of war, if you like, between concerns around global trade tensions and the impact that's having on global growth, and the fact that central banks globally have been easing monetary policy. This week it's likely that I think the Reserve Bank of India is going to be cutting rates as well. But I think what is a concern for equity markets and growth-sensitive risk assets more generally is whether monetary policy is going to be enough to offset the headwinds that are going to come from an escalation of trade tensions, the negative impact that has on business sentiment and on business investment as well. And in the case of Europe, the European economic data last week was particularly poor. The purchasing managers' indices were very weak. Germany, the powerhouse of the European economy, is essentially in recession, and the European economy is very much geared to global growth and actually quite geared to growth out of China as well.
Hi, David. Good afternoon to you from India. Before I get to the expectation as to what you're expecting from the Indian Central Bank, I think a lot will depend on the next move of PBOC. Do you then expect the rate which they set every day, will they continue to move the currency midpoint weaker now?
I don't think it's going to be a one-way direction, because I do think that the PBOC is wary of a situation where the yuan would become a one-way bet, and that could then encourage speculative capital and also capital fly from China. And we did see that in 2015-16, that was a threat to financial stability within China. So I do think that the PBOC will be relatively careful. I think this is a powerful signal, but I don't think it's a one-way track. That being said, I do think that the yuan is going to move weaker. When you have the imposition of tariffs, a natural response to help offset that and the impact that it has on your trade sector and on your exporters is to have a weaker currency. In addition, I do think that they do need to ease financial conditions and monetary policy in China. Although the economy is doing well by international standards, growing at 6%, the direction of travel is for the Chinese economy to continue to slow down, and inflation pressures have been falling very dramatically in China as well. So it's a little bit of a fine line, I think, for the PBOC. I don't expect this to be a one-way path, but the bias, I think, is going to be for a weaker yuan going forward.
Well, it remains to be seen whether China will continue to use its currency as a tool now to retaliate with regard to the trade escalation which is taking place between both the countries. But just a last question from my side, David, a view on India. Indian equities has been underperforming. Of course, now since 2 days, the globe is also trending lower because of trade war issues, and the depreciation of yuan is being reflected in all the Asian currencies as well today. So what's the view on India going ahead? We've got the RBI policy meet today. Expectation is there will be another 25 bips rate cut, and they've already done 75 bips for this calendar year. Do you think monetary policy easing will be enough to support demand in India?
Well, I do think it makes sense for the RBI to ease monetary policy, and I think if it wasn't for some of the pressure that's been coming onto the exchange rate, that you could argue for a larger cut at the forthcoming meeting. Real interest rates in India are relatively high by international standards, and I think in the case of India, which I think is positive for the Indian story, is that monetary policy can support domestic demand and hence domestic growth within India, and there's room for the RBI to do so. I think in contrast with much more open economies, much more geared to international trade and global supply chains, some of the other economies within the Asian region, but also Europe, it's actually harder to see how monetary policy is really going to help very much. And of course, within Europe, we're already in negative policy interest rates. And last week we saw every German government bond running out to a 30-year horizon have a negative yield. So I think India is actually pretty well placed to do relatively well because of the room it has on the monetary policy side and the fact that it's not as exposed to global international trade as some other economies in the region and in the rest of the world.
Okay, David, we'll leave it at that note. Appreciate you joining us today and taking us through your views with regard to what's happening with the global equities and, most importantly, China's move to cross that threshold of 7 to the dollar, which was keenly watched out by the markets. But let's move on and talk about some companies which have been reporting their numbers, and one of them being Godrej Agrovet, which has reported mixed results for the June quarter. While revenue went up 14%, key operational metrics indicate weakness. Well, to understand the numbers in more details, Yash Upadhyay had a chat with the Managing Director Balram Singh Yadav. Listen in.
So we have done well in the animal feed business as well as the dairy business, which were not doing well last year. But unfortunately, the big hit has come because of our oil palm plantation business, primarily because of delayed monsoon and low oil prices. Palm kernel oil is about 1/3 lower than last year, and crude palm oil is about 15% lower than last year. Normally in these circumstances, the domestic industry is saved by increased duty levied by the government on the imported oil, but that doesn't seem to be happening. So not only us, the entire oil industry, the edible oil industry particularly, is suffering.
Right. Sir, also can you help us understand what has been the underlying volume growth on a blended basis for the first quarter? I understand that the animal feed business is the main business contributing to almost 50% of your overall revenues. How have we done on the volumes front?
So volumes have grown over 6% in spite of the fact that because of delayed monsoon, etc., the sentiment was very poor in rural India. But profitability has grown by about 17% over Q1. Our fish feed growth has been very good. Our layer feed growth has been very good. And these segments keep on changing quarter to quarter because all animal proteins don't have the same demand throughout the year. Normally, we have seen Q3 and Q4 are the best quarters for all animal protein businesses, be it chicken, milk, animal feeds, etc. Our crop protection business suffered a little because of postponement of season. Glad to say that the catch-up of monsoon has been very, very good, and we are very hopeful that we will recover smartly in this business. Aztec Life Sciences, because of postponement of several export orders, we were not able to dispatch in the quarter, which will catch up. Normally, we have seen the first and the third quarter in this business are a little subdued, and second and the fourth quarter in Aztec Life Sciences are the main quarters when all the export demand comes. So on the whole, we have certain challenges in all our businesses. The biggest challenge in the oil palm business, which is not in our hands because of the low imported oil price. If that gets corrected, we will be back on growth to profitable growth, on road to profitable growth, sorry.
Okay. Sir, a word on your margins. They have come off from the levels of, about 9.5% to 8.5%. And this is down to the fact that we have seen a massive drop in margins for the crude oil business. Like you mentioned, there has been a change with respect to prices also over there. But for players like you as well as others in the space, how are you seeing at the pricing environment right now? Do you see any price hikes that you could take in the coming quarters in order to, safeguard the margins? And do you expect operationally the performance to improve over the next few quarters?
So let me answer your first question first. Oil prices are determined by global prices. And the way we see it, even if there is a marginal hike, it will not be enough to cover the shortfall which has been created in last 2 months of season. Having said that, I must tell you that the season left is only for 3 more months, where almost 50% of oil production of palm oil will happen. And in case the prices don't rise either because of global prices or because of increase in duties by our government, we are not going to have a good quarter for this business. As far as price hikes are concerned, definitely, except for oil palm plantation business, in all other businesses, we keep on taking price hikes throughout the year, depending on cost, commodity prices, demand, etc., and that will continue. So, but for oil palm plantation business, where price is a very big determinant of profitability, in rest of the businesses, I'm sure that over the course of the year we will improve both top line as well as margins.
And sir, before we let you go, just one last question. There have been persistent weakness as far as demand is concerned. We've had the management commentary from most of the FMCG majors indicating a slowdown in demand. How are you reading into this? And most importantly, what sort of a guidance would you have in terms of your full year top line as well as bottom line growth, given the fact that there is substantial weakness in demand at the moment?
So I think the demand definitely is a little subdued in our food businesses. That I can say. We are not seeing that right now in milk, but as the season goes by, in case the sentiment continues to be same, demand will suffer. In rest of our businesses, they are essential products, like you need edible oil, you need feed for the animals, you need pesticide for the crop. So definitely this will also be determined by monsoon, because pest infestation, because how the animal protein prices are. We strongly believe that a 15% top line growth, which we have registered in first quarter, should not be very difficult for the whole year. However, margin expansions and improved profitability will be dependent on commodity prices, will be dependent on milk prices, and how demand catches up in Q3 and Q4, which are our main quarters for the animal protein business.
Well, that's the management of Godrej Agrovet. But moving focus back to markets now. For last 67 minutes of trade left for this eventful Monday. Get in an industry veteran, somebody who has looked many such cycles, to try and give us his sense of how we would be looking at the markets currently. Dilip Bhatt of Prabhudas Lilladher with us on the show. Dilip, good having you. Thanks much for joining in. What do you think you'd be doing? Because a lot of people are now of the opinion that because the markets have gotten sold off so much and valuations look maybe a tad bit more reasonable, it's a good time to start nibbling in. However, the contra to that is that the world markets are now starting to just look slightly worrying, and therefore maybe there is a bit of more correction waiting by the sidelines.
Good afternoon to you, Neeraj. Well, I think what you have said is absolutely right. There are at the moment too many moving parts, and that's making it a little more difficult for one to take a proper objective decision. And of course, it is very easier to get swayed by a complete concerted pessimism that is prevailing in the market at the moment. So having said that, I think possibly we are done with most of the downside. And even if you were to factor in some of the international factors, I think, yes, that may hold back. But I think on the downside, possibly we are done with maybe another 100 points if it slips. Not impossible, 100, 150 points. That just slips in a day as what we have seen today. But I think time-wise, possibly we are looking for some kind of maybe another a week or 10 days max. But I think this will be the time when we will see that quantum-wise as well as time-wise, we are almost, we have spent a good amount of time in this correction. So I think from my experience, from whatever we have seen in the past, always very difficult to take make a call at the bottom. Thinking that it's a bottom. But I think I would surely say that around these levels possibly would be the time to really acquire and then possibly hold on to it. And one can gradually buy into these markets. And, at one point of time, everything gets discounted, whether it is the complete bad news and, the pessimism that prevails today, which is what we have seen. I think all that gets reflected at a particular level. And now, opinion possibly around these levels, a lot of it has been factored in. So I would say that even considering the fact that internationally things may go a little more, against the Indian markets, but possibly the Indian markets have really underperformed so badly in the last 1.5 months that internationally I don't think now it can do much more damage to the Indian markets. So I would say that yes, one should buy and in a very gradual way, possibly around these levels. And I think one can get a reasonably very good appreciation over the next 8 to 12 months.
Hi, Mr. Bhatt. Good afternoon. The next big question will be what to buy then at these levels. What are you recommending to buy?
Well, if you were to leave out those 10, 15 stocks or 20 stocks which have really done very well, I think the entire pack has really done pretty badly. And I think possibly one can see some kind of values around those companies. And of course, one would be tempted to say that one should buy a mid-cap. But still, a lot of front lines have taken it on their chin. And they have been beaten black and blue. So some of those names possibly can crop up. But I think some of the steadier names which one should still buy in these markets would be some of the auto packs which possibly can also give a good bounce back. The frontline names which have taken it on their chin like Maruti or M&M, maybe one of those stocks. And maybe something like Larsen & Toubro, which has not gone anywhere at the moment or may have come down somewhat. So I think some of those names can really work out well. Or even something like an Axis Bank, which possibly has corrected quite a bit. So I think some of those a little reasonable, well-known names should be the first catch at the current levels.
Okay, so stocks like Axis Bank and Maruti is something which can stage a recovery according to you. But if you're suggesting that we bottomed out now, considering Nifty shaved off 1,000 points from the highs that we had seen during the union budget, and the key question remains the cautious commentary, Mr. Bhatt, that we've been getting from a lot of these good quality managements as well. Do you then feel earnings going ahead in the coming quarters could be depressed because of the slowdown that most of these industries are witnessing? The liquidity pressures looks like they still persist, looking at a couple of the earnings from the space.
Absolutely. I think the earnings will continue to remain depressed, muted, and unlikely to really bounce back over the next 2 quarters. Maybe I think the fourth quarter is the quarter where everybody has pinned their hopes. But of course, that quarter can keep on getting postponed, the quarter which really turns around. But yes, I think the performance will still lag behind. I don't think that the performance will come back in a hurry. But as what I always said, that for any of these, there is always a level up to which you can beat them down. And maybe even if it takes a quarter or two more before we see some semblance of recovery in their performance, I think still market possibly will move on, will not really wait for that recovery to happen.
Okay, Dilip, we'll leave it at that. Thank you so much. Really appreciate you taking the time out and speaking to us today at Bloomberg Quint.
Always a pleasure.
Well, that's the view from Mr. Dilip Bhatt of Prabhudas Leeladhar. Believes that investors, if they add on to positions right now, will make money over the course of the next 12 months, but stagger them out. Don't get into them ASAP. Well, I think it's also important to take stock of the trade perspective, because one is buying in a staggered fashion from an investment perspective. The other is looking at the trade perspective, the stocks of how some dealing rooms have seen some flows and some buying. The question is, can that last, or will, because of what Europe is doing and the world markets are doing, will we correct more? Hemant Kapadia, Kya Choksi, who looks at all of these factors very closely, joins us in the studios. In a bit, we'll get in other experts as well. Hemant, good afternoon. Thanks for joining in. Are you buying trading positions today? Are you long today, or are you net short today? On the indices first.
Very good afternoon to you, Neeraj. Thank you for having me. Frankly speaking, I am neither long nor short. I would currently look for opportunities to buy, frankly speaking. Like you said, Europe is in turmoil, and if I look at it, even US is looking shaky as far as technical is concerned, Neeraj. So, see, up till now it was our problems. Now it seems like a worldwide contagion, and if that happens, I'm not sure where. Having said that, we're already down 10%. So, but I wouldn't go short over here, despite still some persevering weakness. I wouldn't go long in future, but I'd probably go plain vanilla calls, because 10,783 was support. We've come to that intraday, and I think in the next couple of days, well, I thought that last week didn't happen. I still feel there's going to be a small consolidation, a recovery coming in. So I would be slightly tentative, but I wouldn't short. No.
You have an option strategy?
Yes, I have a very...
From writing to buying now?
Yes, because I don't want to write anymore, because I have a feeling maybe it's going to not take immediately, Navneet, but we've come down to close historic support levels. So with a few hits and misses, now also we have the political surprise out of the bag, so to speak. So a 25 basis point rate cut is already somewhere built in. VIX has gone up, like you said, for international reasons. So I think everything that has to happen has happened, and we've discounted. And last two trading sessions, now we've seen a spike in the last half an hour and 15 minutes. Government driven, DI driven, whatever, but that selling has been absorbed somewhat. So I have a feeling that once again in somewhere this week we'd see a bounce or at least consolidation. So having said that, I have a plain vanilla buy in the Nifty 11,200 call option. It's a buy it at around 40. Stop loss of 0. So what I mean to say is hold till expiry. You're probably going to lose your $40 or hold on. And I think a bounce should take it closer to 11.2, and the premium would be probably 120. So
this is the monthly contract?
Yeah, monthly.
Okay. Okay, so he means suggesting to buy the 11,200 August 29th expiry, which is the monthly expiry. What about individual stocks? I mean, we've seen bounce back in a couple of the counters. Would you play on the upside?
I think so. I think what a previous guest mentioned, some of the auto stocks, and the stocks he mentioned, maybe it's Axis or Mahindra. Even, I mean, I like some of those, and even some of the banks. So I like UPL particularly, Navneet. I think that also looks interesting. We seem to have ended one phase of its correction, or we are ending. I'm not saying we've ended, we probably are ending. So a buy in UPL at 555, stop loss 547, target 571. And secondly, I have a buy on Federal Bank. I mean, many of the banks are looking ripe for a bounce. Maybe there could be a little bit more pain left before the bounce comes in. So buy in Federal Bank at 86, stop loss 83.50, target 91, probably would be valid for this whole week.
Okay, so Federal Bank, I mean, just get that call up again, simply because remember, like some of the others, Federal Bank too has gotten beaten, no, not Federal Electric, Federal Bank has gotten beaten down to when the results came on. The stock was at 107. From there, it's come down all the way to 86. So we talk about DCB having corrected from 240 to 200. Well, Federal Bank in percentage terms has done all of that and more. despite the fact that the results were not all that bad. So this is the post-results performance. For the 3-month chart, the large portion of the movements happened in the last 15 days, and the stock has duly corrected as well. Stocks which have not done too badly today, and that's where I want one quick trade from you, Hemen. Between TCS, Tech Mahindra, HCL Technologies, which one is a chart that looks relatively strong? You can choose to, of course, say that you want to trade any of these on the upside.
No, I wouldn't mind, because I think, Infosys is mental, I think, has been taken over by TCS for some time now, maybe the last 2 years or so. So TCS was the first to be of the blocks, and we still remain good. So frankly speaking, TCS is good, but well, if I look at the risk-reward ratio, I'm not sure that is in favor, because simply the stop loss would have to be deeper. I'd probably go in for something like a Tech Mahindra, Neeraj. I think we've come off from 840 to almost 600. It's huge. We saw a big spike of 96 lakhs 4 trading sessions back, and those levels have held. So the logic is strong hands are bought. So I'd be more sanguine going long on Tech Mahindra, but TCS continues to, be the bulwark of the IT space as of now.
Okay. Not sure if rupee depreciation is creating any sort of tailwind for these IT companies. The only sectoral index to be trading in the green territory, that's Nifty IT. By the way, Indian Bank numbers flashing on the screen. The provisions are at 795 crore versus 1638, which was seen in the previous quarter. That's the March quarter. But I guess the asset quality has deteriorated. The gross NPA is at 7.3 versus 7.1. The net NPA is at 3.8 versus 3.7. Also important to note, there's no growth that has come in for the net interest income. That's the NI, which is at 1785 for the current quarter versus 1807, which was seen in the corresponding quarter. And the stock, however, recovered mildly, but still sitting with very sharp losses of about close to 5%. That's Indian Bank. Just want to pull up Bata. I know we addressed this stock at the start of the show. I pulled it out for my futures and options check as well. The stock's been sitting at days high. There are some incremental gains. And most importantly, the numbers were good. Gross margins expanded. But there's action seen on both cash side as well as the future side. So the volumes on the cash side definitely are on the higher side. But the futures are now seeing heavy buildup of 27 to 28% in a weak market like today. So good numbers definitely being rewarded. Long position seen for Bata. Very quickly here, on the charts, if somebody's been holding longs, what should be the target?
Well, if it's intraday, I think it's a book. Otherwise, if it's a positional, one would have to keep a progressive stop loss. But like you said, cash market, F&O build up, I would keep a progressive stop. But yeah, it's worth a hold.
Okay, Samir Kalra of Target Investing joins us right now as well. Samir, you do buy into companies at contrarian levels. Are you going long onto specific names right now, or are you waiting for a bit?
So I'm waiting for a bit.
You believe markets will come off?
Yeah, because we've created around 50-55% cash now. So
55% cash?
Yeah, and 20% is short, as a pure short. So I think we're headed towards a good time period consolidation. This won't come back very easily to those levels what we had seen in past 3 months. It's not only because of the FII surcharge or whatever reason it started accelerating. There are a lot of factors. See, a company like Maruti reducing the contractual workers, that has happened after a long time. So it's not something even a boost or a kind of a stimulus can reverse very soon. Because first of all, they have to understand what exactly is the issue. No extra money will be pumped in until unless the exact issue is being caught on. And that would take, I think, time. So earlier we were in a denial mode. Now we have entered the acceptance mode from my point of view. And then there will be a remedial mode where things might start, procedure might start.
Have you sold anything out of your portfolio in the last 10 days? Which you are at a liberty to talk about.
So sold quite off. Canfin we sold off.
You sold off Canfin
yeah.
homes, okay.
NTPC we had that we sold off. There were a lot of, even Deepak Nitrite we sold off.
You came out with a good set of numbers.
See, the point is what happens if you see past couple of days what's happening. If you come out with good numbers, you get rewarded that day. The next day the whole story reverses. Because what has happened, if you see, the volumes are more on intraday basis. They're not delivery volumes. So I think you can find lower levels of a certain stock where I want to pick up. I may be late, let's say if it reverses much more quickly than what I think, I may be late another 10%, but I'm not foregoing that 20% downside which can come down.
Let me try and twist my question a bit. What do you have in your portfolio which makes you believe that you should hold on to this one but not hold on to a Canfin or a Deepak Nitrite?
So,
and why?
For me, Petronet LNG is one of the stocks. Another is Sun Pharma. Because see, right now I'm putting my portfolio into two places. One is the tech part, the defensive mode where we go. Because if this market doesn't move the needle for, let's say, on the upside for a good long time, then a lot of money which is compulsory equity money will move into IT and pharma. And if I see my flows and if I judge my delivery volumes, it's happening already. And last 18 or 20 days, it's just accelerated. So a lot of money has gone from financials, banks, autos to IT, pharma and consumer. So that's where again that consumer whole thing, that results are coming decent. Valuations are still stretched, but there is a certain 10%, 15% kind of a correction. So Infosys, Petronet LNG, all the stocks which don't show that much of volatility when the markets go down. Because I'm not concerned with the upside right now, I'm concerned with the downside of my portfolio. So if I'm able to save that, when the reversal comes, even if I'm 5% late, it really doesn't matter to my portfolio that time.
All right, Samir, stay on with us. We would love to get some views on some of the individual stocks which have been doing well. But before that, let's bring in our next technical expert on board, and that's Ajit Mishra of Religare Broking, who joins us now. Hi, Ajit. Good afternoon, and thanks a lot for joining us today on Countdown. What are you doing at current levels on Nifty 10,870 and Bank Nifty still sitting with cuts of about nearly 2%?
Yeah, good afternoon. See, basically last time when we had a word regarding markets, we had a view that one should continue with sell on a rise approach. But now, since we have reached closer to its very crucial support, which is closer to around 10,760 mark, I feel it's a time for market to witness some bounce. So the idea is to, obviously, only for the bounce, we shall be buying at current levels closer to around. It will be great in case if we able to buy around 10,800 mark with 10,700 stop loss, and clear at around 11,100 as a target.
Okay, so the view remains same from both our technical experts. They are expecting some bit of bounce on the Nifty. Ajit, but in terms of individual stocks for today's trade, anything that you're recommending for this afternoon?
See, Dabur looks strong to us. In fact, we have hardly seen any decline in Dabur, and post results also it has been holding very strong. So it's built a strong pivot at the current levels. So one can definitely initiate fresh longs at the current levels with the stop loss of around 420 with 450 as a target. On the other hand, we are seeing a little bit of consolidation in Sun Pharma. The overall trend is down. So we would recommend going short and any bounce closer to around 422 to 424 with 434 as a stop loss and around 402 to 400 as a target.
Okay, those are some technical ideas coming in from Ajit, but Samir, I'm just going to go back to your point. You said good earnings are being rewarded only on that day, but there are some exceptions, and that's in the form of the paint companies. Asian Paints, even in the weak market, has been touching all-time high levels. We'll be getting Berger Paints numbers today. Do you have exposure to this space? Because the earnings have clearly beaten street estimates.
So I've reduced on the results. There's this one logic which April, there's a lot of pre-stocking happening at a lot of distributor levels. So what happens, Berger Paints, Asian Paints, everyone starts pushing from the 1st April itself. So they build up the inventory from Jan, Feb, March at their own level. And when April starts hitting, they push that inventory to the distributor level. Now the distributor level picks it up onto the demand of the customers in July onwards. That's pre-festival kind of place. That if it doesn't pick up, this whole volume growth story of what they are betting on to continue will fall apart very quickly.
Higher digit
yeah,
decorative
because the only point is your
growth.
valuations are stretched. You again don't have a room for an error. So if there is a stuck up, see the residential market, the completion of projects is lower. quarter on quarter as well if you even track the Bombay based projects, forget about anything else. Secondly, there are no replacement demand, what I call that renovation of houses, that has gone slow. So where the distributor will be able to pull through. So that's where I'm saying, so this is a good quarter to get out of certain stocks. I'm not saying totally exit, reduce your weights, and then if the next quarter comes out better, you can add it up over there. But the only point is in this quarter and next quarter results, there's a lot of downside potential which they have.
Okay, and for some of them, of course, seasonality also comes into the play, especially for the paint companies. This quarter being monsoon dependent may not augur that well. But let's move on and talk about some earnings. Market participants, by the way, were cautious ahead of elections, and that's evident in BSE's average equity turnover, which slumped in the June quarter. To get more details on the factors at play in the quarter gone by, Sharad Dubey had a chat with MD and CEO of the company, Mr. Ashish Kumar Chauhan, and began by asking about the Star Mutual Fund platform. Listen in.
Yeah, the BSE Star MF platform 2 years back was earning zero, and in 2 years' time now the transaction charges from that has now almost caught up with the main equities market. Almost 80% of the equities market revenues are now also coming from Star MF platform. So it has done exceedingly well beyond our expectations, and it continues to grow month on month. Every month, even in July, we saw record volumes, although the fact is that mutual fund has not been able to overall it has not been able to attract much investments over the last few months, but BSE Star MF has been gaining market share, and that's why it's growing month on month over last literally 10 years. In terms of the overall scheme of things, BSE's EBITDA margins have increased on year-on-year basis, and largely again on the account of the mutual fund doing much better than expected. Equities market volumes have not done well, and especially where BSE is strong, the small stocks, their value and volumes both have come down by almost 70-80%. That's where BSE has seen some a downturn in the transaction charges which it gets, but that has been compensated by the Star MF platform. The listing revenues have been reasonably stable. The IPO revenues, which usually BSE gets in large numbers, has gone down because there have not been too many IPOs in last 1 year, and hopefully if the IPOs revive and the small stocks revive, BSE will have a different sort of revenue structure going forward. But currently the star performer is the BSE Star MF, which is holding on the overall revenue growth and overall sort of profitability of BSE.
So can you give us the update, for the share buyback, that the amount was around 460 odd crore rupees. So what's the update on it?
So the BSE's AGM has approved it. There was a worry that post budget there will be a huge increase in the outgo relating to taxes, but the total tax outgo is only 12 crore rupees, and that's where the total outgo on buyback account will be 472 crore rupees, and that has been approved by the AGM. So the post approval activities that are going on, and if everything goes all right, then as per current schedule we should be able to complete the entire buyback by October first week of 2019.
Well, so in terms of the net profit, they have actually decreased, almost 20% on a year-on-year basis, and it's at around 41 odd crore rupees. So what may be the reason for this? Will it be like lower listing charges or higher operating expenses? What do you think about it, sir?
As I told you, the overall income has remained stable. There has been there has been expenses which have increased to some extent. There are two large expenses that have increased. One of them is the employee cost, where average 8 to 9% income and expenses that increase every year on the employee cost, but due to overall few employees which we had to hire due to setting up of the commodities market, which run longer hours and also interoperability, we had to basically incur more expenses, which will continue. But on top of that, some of the employees which were part of the other funds and all have been now made as part of the BSE's own payroll because of the regulatory diktat, and that has increased our overall expenses on the employees. The second part was that BSE's listing fees have increased, and against that, the regulatory fees, which is coming to almost 31%, has also increased, and that's where you can see the expenses outgo that has happened because the income has increased on one side, the expenses have increased on the other side, and these are the two reasons why you can see a dip in the overall profitability of BSE.
Well, sir, in terms of your average daily turnover for the equity segment, it has been actually gradually decreasing if you see it on a yearly basis. So if you see, so will it be regarding the market conditions going bad? Any other reasons can be attributed to it, sir? And what you are looking forward, going into FY20?
See, post interoperability, which was implemented finally after 9 years, around 2 weeks back, we have seen some increase in the trading volumes. It's early days, but and I won't take it as a trend, but because last few almost 6 months everyone was working on interoperability, people were not aware what will happen, and that's where you could see slight dip there. The second reason, as I told earlier also, there has been a decrease in the value as well as volumes of the smaller stocks, and BSE's large amount of transaction charges used to come from smaller stocks, and that has gone down by almost 70-80%. So that's why overall revenues are going down. If both of them actually come up, then you will see a different revenue structure going forward. And the interoperability also has made it easier for people to buy on one exchange, sell on another exchange without paying margins, and also without actually settling at two different places. And that we have seen even in the derivatives, equity derivatives also. There is a possibility that we may be able to see some volumes. Already we are seeing almost 40 to 50 lakh orders coming into the derivatives market every day in equities, and few transactions which are happening on test basis currently. So overall, we think the next quarter would see how the interoperability is working out in the short run.
Yes, speaking of interoperability, I just want to ask you this question: that are you going to see any kind of market share gain in the equity segment?
So currently, the way we look at it is in currencies we have got good market share. In SMEs we are like 60% market share. In bond distribution we are 60+ market share. Even in IPOs we are 60+% market share. Commodities we are slowly gaining ground. And so in equity and equity derivatives, which are currently not doing so well, hopefully post interoperability, we'll be able to make some mark there.
Park figure, if you can say, sir. It's currently at around 7.4%. So what you can expect?
Pardon?
So what's the current levels? It's like there has been a thing. So what current levels will be there?
Yeah. It remains to be seen, early days, but we have seen some upside in the total volume of BSE over last 2 weeks, perhaps due to the interoperability, but perhaps due to other factors also. It remains to be seen how the brokers and other market participants perceive this shift in interoperability.
Well, that's Ashish Chauhan of Bombay Stock Exchange and the BSE stock. It may do well in bits and pieces. It may have good cash on its books, etc., etc. I don't think the markets really love this. It's just gone one way. I mean, the last 12 months, 18 months, or whatever the time frame, more often than not, if you had bought a stock of BSE, you would have lost money as opposed to making money there on your screen. Brief interludes of an uptake, but otherwise under pain. What is also under pain today, by the way, last 37 minutes of trade left. Yes Bank, Indiabulls Housing Finance, and select names like Z and Tata Motors under pressure as well. Now, there are 2 or 3 interesting names out here. We'll take a technical view on Z. We'll take a fundamental view on Yes Bank. First, a technical view on Z. I mean, the deal came in. The stock before the deal went down 5%. After the deal went down 5%, and today is down another 3%. What does one do now? It's a 6th day of losses, as my producer tells me.
Well, 325 is important. We've not closed below 325 on the daily chart since 15th May. So we're at crucial levels. I wouldn't short Z. anymore. We're down for 1, 2, 3, 4, 5, 6 days. So I would be, well, it's still showing a 4% short build-up, but no. I would probably take a counter call. I'd probably buy the 350 call option. I don't think 325 breaks without a bounce. I'm not saying 325 doesn't break. I'm saying 325 doesn't break without a bounce, because if and when 325 breaks, a 12-week sideways consolidation between 325 and 408 gets broken down on the downside. So implications could be pretty bad. Currently, not without a bounce.
Okay. You know, come in on Z and also on the top loser on the Nifty today, Yes Bank. You were bullish on this one. It's only correcting the last few days.
So I think if you pick up Yes Bank first.
Okay.
See, as I said, capital raising for them is the most important part. We know the books are questionable. We know everything. Anyone wanted to know or did know, now it's on the books and on the P&L. So I think now the only urgent process is capital raising. Till that time it happens, putting any more money, it doesn't make sense. Holding on to it, yes, for me it makes sense because I'm looking for next 5 years. I don't look for next 1 year or 2 years in that, because the more pain they go through in the shorter term, which I mean by 12 to 18 months, the better it becomes on the reversal. So I think for me that becomes a hold right now. On Z, see, we were earlier also discussing at a point when the whole story started, that I don't see any strategic guy coming in and buying it out. Because the only point is the regulation has impacted the system so badly that the volatility in the subscription and the ad revenue is not something which you can stretch right now on an Excel and sell it off. So I think any strategic buyer, even if it's interested, will hold on for 6 months, 9 months, see how the financial investor helps out the company. And then maybe, you know, in the second tranche when they want to raise further capital, there might be a strategic partner coming in. But I highly doubt anytime soon it will happen. So I think it's a sell for me. For me, even if you get it at 330, 340 as a price or a bounce, I think it's better to exit right now rather than hold on and have a high hope of turnover.
Okay, that's the view coming in on Z. No respite after the deal has been announced. Looks like the street is disappointed with no strategic investor coming on board. Just want to highlight few stocks which are moving around. By the way, Bharti Airtel is at day's high. That's your top gainer of Nifty right now. Remember, this one was also up and about on Friday after the numbers, and this is another stock where rally usually fizzles out, but this time that's not the case. The stock's sitting at day's high over 3%. Ajit, come in on the charts on Bharti Airtel. What do you make of the move? Is there more upside left here?
Yes, probably we may see some uptick from the current levels, but again, the overall trend still looks sideways. So the upside seems capped. So closer around 360, 65 levels, one should exit in case if somebody is holding fresh longs.
Okay, that's Bharti Airtel. Pull up Venky's. I believe that's also gone up 14% in trade. So some positive moves seen for that stock. Snowman Logistics is the other stock where some buying momentum has come in today's trading session. Whereas on the losing side, whole host of losers definitely, but NBCC, by the way, that's down 11%. Kaya is down 11% in trade, and also stocks like Sadbhav Engineering and Infrastructure, which we've been highlighting for the last 5 to 6 trading session. The correction continues. In fact, Sadbhav Infra is down 12 to 13%, sitting at day's low. But Samir, any thoughts on stocks like Sadbhav Infra and Sadbhav Engineering if you're tracking? We've seen sell-off in the last 5 to 6 sessions.
So I think if you see their annual reports, which I saw in, I think, 2010, that time the related party transactions were at least 30% of the whole revenue. So I got scared over there only. So I stopped seeing the books earlier on. So I think it's better to stay away. The main parameter at a infra level is always these related party transactions, because what happens, there are these subsidiaries who are doing the actual work, and how much money is implemented over there and how much money goes out of the books, you really don't know. So it's better to stay off, stay with the bigger names, L&T if you want to stay in the infra side, though I don't see a upside over there. but I think it's better to focus on maybe a IT and a pharma and consumer right now.
Okay. So that's Sameer's portfolio view, so keep that at the back of your mind. By the way, just before we get to the Fab 4 stocks of the day, need to mark UPL intraday. I think it has just gone off. Maybe I'm wrong, but just pull up UPL and see what that is doing in the session. Yes, a sharp pull back into UPL in the last few minutes of trade, as also Indiabulls Housing Finance, which has succumbed to some selling pressure. And what's trading at the day's highs are select banks like ICICI Bank and SBI. From where they were, they're certainly up. Yes Bank is trading at the lowest point of the day, by the way, so keep that at the back of your mind as well. So a lot of action at the large cap end of the market. The broader end too, of course, not devoid of action, but just that pointing out some of the stocks which are really shooting up in the last few minutes of trade. What's not done well at the broader end of the spectrum, Gati, PTC, NBCC, and Yuan Housing, as also Equitas. We'll talk about Equitas with Sameer Kalra in a bit. But first, let's find out what's made it to Sharad Dubey's list of the Fab 4 stocks of the day. He was interviewing the management of BSE. Let's find out what's made it to his list now. Sharad, good afternoon. What's made it to your Fab 4 list?
Good afternoon, Neeraj. The first stock is up, is Venky's, which is up by almost more than 10%. Its highest in almost a week after it reported its quarterly earnings, and the revenues rose up as high as 20% to 905 odd crore rupees. And the poultry segment grew almost 30% on a year-on-year basis. Up next, we have Bombay Dyeing, which is up almost 6% after snapping a 5-day losing streak ahead of its quarterly numbers, which will be coming out today. Up next, we are having Trident, which is up almost 3.7% after the company, management gave a commentary that is going to increase the capex addition by around 20,000 million tons per annum, and also for the amount for this investment will be around 222 odd crore rupees. And also, it came out with its quarterly numbers, in which the profits doubled to 122 odd crore rupees. And the last stock of the day is Alkyl Amines, which is up almost 1.3%, and with the high volumes at almost 8 times its 20-day average.
All right, thanks a lot for that. So, a few names that you need to monitor. Alkyl Amines features in a list of a lot of people looking at that stock positively. Do watch out for that one. I want to talk about one stock which is not doing all that well, and that is Equitas Holdings. 103, down about 9% today. Ujjivan hasn't. Ujjivan also should come up on your screen. By the way, both the companies came out with numbers. This one too has come off a bit, but tactically. A lot of people were thinking of whether they should back Equitas and Ujjivan, the small finance banks, long runway for growth, etc., etc. And then that shareholding pattern has become a spanner in the wheels. But the numbers too left a bit to be desired this time. What would you do now if you had them in your portfolio?
So I think if you have, get out or switch it to maybe a IndusInd Bank. Because
at these losses as well, right? Obviously.
At these losses as well, because see what happens right now, you have a big competitor who has a larger reach and now has a better cost of funds, right? And then there's a new IPO as well coming up, right? So, and you have this whole holding discount issue going out, and that's never-ending issues. So result-wise, if you see, they do 2 quarters decent enough, which are stable. On the 3rd quarter, they take the hit, which has become a trend. If you see their quarterly NPAs, that's what they do. And that's where I feel that much more dicey, because then you're not taking the full exposure you are meant to do in a way, and you're still being conservative on your asset quality issues. So I think it's better to get out of the system right now. Take a hit, whatever you have, replace it with a better, maybe a full-fledged IndusInd Bank or a ICICI Bank right now. Because the only point is now the micro lending euphoria is somewhere, I think, out of the system. It was earlier good as a private equity backed system, and because for the shareholder it's never created value. Even though if you're charging 26-27%, if you would have invested in Equitas or Ujjivan today, betting on the micro cap or a Bharat Financial, you wouldn't have made that much of money irrespective if you would have invested the same amount in a private bank. So it becomes a comparison. See, eventually you don't want to provide the debt financing to a micro lending. You want to do a equity investing. So I think it's better to be with a larger bank who can sustain all these issues rather than a standalone.
Business Standard, Neeraj, did a story yesterday where they said that Equitas is likely to take bonus route to list their small finance banks, and for them the deadline ends, I believe, next month, in the month of September. So it's their story, but let's see, there's no announcement which is coming from the management, but definitely one can expect something considering the deadline now nears.
Yeah, but it's difficult, and I think Equitas has some permissions, Ujjivan doesn't, or the other way around.
Ujjivan still has time. I think their deadline ends January 2020.
Yeah, but I think there's, from whatever deadline I recollect, they have one. Equitas has a clause which allows them to reward the minority shareholders, which probably Ujjivan doesn't, and therefore there is a bit of an issue out there too. But just these numbers, the way they have come out today and the asset quality worsening, I think the point that Samir may probably made, that these smaller banks, 2 or 3 quarters may be good, but 1 quarter of an accident and just takes them back by 3-4 quarters. So again, play catch up, and by that time, you might still hit 1 more quarter, but again, there is a bit of a pain. So clearly showing in the way the stock has cracked today. What's happening with Gati?
I've been seeing the fall since, let's say, 200, 250 kind of levels, and couldn't figure out, because even if you see VRL logistics, so I think the whole relation now comes back to, for logistics, to the auto industry, because if you see 30 or 40% of freight increases or the traffic was being done by auto industry. Now when the all production cuts happen, the first major pain is the OEM, second major pain is the logistics companies. So I think overall Gati, VRL, you'll see in next quarter numbers, to a certain extent this quarter numbers as well, there is a burden of that. Because when that system gets out, you're not able to increase the prices of overall freight. You're not able to run at that capacity utilization, you're emptied over there. And the operating leverage in a certain sense of your capacity goes out. So your expenditures are fixed. That's where the margins also get a hit. So I think it's better. Logistics again is dependent on the auto, I think, still more than any other means of products.
Okay, fair call. Samir, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time, and all the best with your contra investing as well.
Thanks.
Well, those stocks, some of those would be interesting. UPL is just fallen off the cliff, really. It's now down 6%, 537 and counting. So something's obviously happened here, but big buck of selling that's happened in UPL in the last few minutes of trade. So do watch out for this one. Certainly under a bit of pain right now. So that is that one stock that you do need to monitor in the session today. I just wonder how do stocks like UPL or some of the others appear on the chart as well, simply because of the kind of sudden fall that we've seen. Ajit, have you had a chance to look at the stock of UPL and the way it's trading right now? What would your advice be?
Yeah, Neeraj, see, basically you are right, that kind of decline, usually, we used to see that the stock is always on the positive side, but in the last 1.5 months, we are seeing that stock has been reacting on the negative side. So it's kind of a profit-taking phase that we are seeing. And now what charts are indicating is that closer to around 525 to 520 levels, we may see a pause. So it looks slightly oversold, so a possibility of consolidation and followed by a rebound can't be ruled out. So in case somebody is holding any long position, then 520 should be the stop loss.
Okay. Well, that's the view on UPL. Lots of stocks now cracking. We're talking about defenses holding out. The kind of fall that we've seen in a power grid today, 4.5. Reliance down about 3.5. Kotak Bank is down about 3% at 1460. So a lot of strong hands today, even on a day like this, have cracked quite a bit. And it's important to monitor all of these. But watch out for Reliance Industries. Gave a bit of a up move, I think Friday's session was amongst the principal ones leading charge on the upside and has completely given way. The Credit Suisse note, I think, also proving to be one factor in addition to the market weakness by and large. 7 days performance save for Friday's move on the downside. Yogesh Mehta of Yield Maximizers will be joining us as well to talk about Reliance. But technically, if Reliance were to not do well, it's difficult for the markets to really come back unless other stocks perform exceptionally well. How does Reliance look on the charts, I mean?
Won't make a new high for 12 months.
No, that I know. I'm talking about what to do now, right now.
Nope, it's going to go down some more.
So would you take a trade here?
No, I'll take a trade on Wednesday morning.
Okay, so you're avoiding a trade right now, but you do believe that there's a higher probability of stock heading lower as opposed to heading higher?
For 2 days, yes.
Yep, but I guess it's been trading below 200-day moving average for the last many days. But surprisingly, last 2 days it was lending support to the markets when we were weak. I guess today's credit squeeze note is weighing on Reliance Industries. I want to pull up Strides. That's almost at day's high. Strides Pharma Science. Remember, this is the other stock which outperformed last week. It was up 10 to 11%. Right now, sitting at day's high of about 2 to 2.5%. I mean, would you trade this one?
Strides Pharma Sciences standalone, yeah, it's given an upward bar reversal. So, yeah, a brief flutter, probably flutter would last for a couple of days or maybe at least till tomorrow. Yes, it's worth a very short-term trade, and even on the weekly charts, we've had we saw 2 crores volume in the last week, which is unnaturally high. Yeah, I think we're probably looking at a medium-term bounce along with a short-term trade. No need.
Okay, so watch out for Strides Pharma. The other stock which is recovered from its 52-week low is Magma Fincorp as well. It touched 52-week low of 63.4. There seems to be a reversal from that. And right now this one too is sitting at almost at the high point of the day with gains of about 7%. Ajit, JSPL and Tata Motors both are registering fresh 52-week low almost every single day. JSPL down 5.5%. Tata Motors now trades somewhere about 122, 123. Is there more downside left for both these stocks? If somebody's been holding shorts here, what would you advise?
See, yes, you are right that almost every day we are seeing making both these counters new lows, and talking about the other stocks in these particular sectors like Maruti and Hero MotoCorp, Bajaj Auto, we have seen a marginal rebound in between, but Tata Motors has been continuously going down. So 120 I feel is going to be crucial. In case if it fails to hold the same, then we might see the stock touching a double-digit mark also. So the idea is, in case if you're holding shorts, just see that how the stocks react around 120 mark. In case if it fails to hold, continue with the shorts. And for the Jindal Steel also, the bias on the negative side. But yes, considering the oversold position, we may see some rebound. So considering that, one should partially book profits in case if you're holding, fresh, already having short positions. But for the fresh shorts, one should wait for any rebound.
Okay, that's the technical view on JSPL as well as Tata Motors. The other one which is moved to the high point of the day, and that's the heavyweight on the index, HDFC, that's sitting gains of about closer to 1%. But just a few minutes to go now, almost 15 minutes for markets to shut shop. So it's time to take a look at what the dealing rooms are recommending in trade. And we've got Yatin as well as Darshan Mehta joining us with their channel checks. Good afternoon to both of you. Darshan, you go first.
Yeah, so Navneet, good afternoon. One of the stocks that's been spoken about is Titan. Obviously, it's corrected significantly from the highs of 1300 where it was. It will come out with numbers tomorrow, and the sense that dealing rooms are getting is that the numbers probably won't be on the best side. It's no doubt it's not a cheap stock anyway, so there is selling pressure that's happening on the counter. Muthoot Finance is the second counter in which there is selling. It's down almost 1%, but dealers indicate some of the domestic funds have actually been seller on the counter at higher levels. And finally, SBI has recovered significantly from the lows. Day's low was down almost 5% at this point of time. Dealers indicate that at levels of close to 300, some of the domestic funds are accumulating at this level. So Yatin, what do you have?
SRF, that is one stock. They will be reporting their numbers, shortly. But ahead of that, dealers on the basis of F&O trends are recommending a sell today, buy tomorrow kind of a strategy, 2.5% down for that one. UPL also is something which is facing severe selling pressure. Dealers do indicate that not only in the future and option segment, but a lot of cash, related unwinding is seen on the long side for UPL. The pressure might continue on the stock. So dealers do expect some further downside as far as UPL is concerned. 5.5% down on that one on decent volumes of over 54 lakh shares. And Voltas is the final one, wherein dealers do recommend at lower levels, around 600 odd levels, domestic funds are buyers in trade.
Well, let's see if that propels the stock higher or no. Thanks a lot for that, Yatin. So those are a few stocks to watch out for. Yogesh Mehta joins in as well. Yogesh, actually, since we're on the topic of Voltas and a few others, let's talk about those before we get to the others. Voltas or some of the other cooling solution companies, the numbers seem pretty reasonable. Are you a buyer there, or is the broader market mood leading you to stay off buying right now? I don't think Yogesh can hear us. okay, we'll probably try and repatch that line. Just wondering, Hemen, a Voltas or a Symphony on the charts?
Well, if you're talking specifically about Voltas,
yes,
Neeraj, we've had a spike, so it's probably going to take a day or two of consolidation over here. And yeah, some sideways movement expected with a negative bias. So currently it's not a trade. This 560 to 615 move, that's almost 10%. I think it's going to go into hibernation for a couple of days before it makes another attempt. But yeah, the undercurrent seems to be positive.
Okay, that's Voltas for you. Berger Paints is giving up the gains that we had seen, so the stock's now trading just about flat right now. The numbers come out today, but let's touch base with Yogesh Mehta of Yield Maximizers. Hi Yogesh, good afternoon. Hope you're getting our audio now. Yogesh, what are you doing in difficult times like these? Pressure now coming in from the global markets as well. What are you advising your clients to do?
Since the markets are right under very lot of water, so I think
the audio is not clear. We'll touch base with Yogesh, pardon me, once again. But for the time being, Nifty is still sitting with cuts about 1.2%. One stock I want to pull up is MGL. That's seen some bit of buying interest in today's session. Remember, Gujarat Gas had come out with numbers few days back, and on the volume side, numbers did look good. Mahanagar Gas is sitting with gains of about 2%. Very quickly, Hemen, on the charts, any thoughts here?
On?
Mahanagar Gas?
Yes, I think long-term battering, medium-term bounce is underway. Looks promising.
Okay, let's cut across to the finance minister who is addressing the media right now.
So that's second. What is the third? Sovereign bond. I think I did mention it once before. It was mentioned in the budget. We have really not started in terms of, I know some numbers were floating around because you've heard earlier Secretary mention this is the quantum and something like that. There's not much work after the mention because we've all been busy with so many other things in the ministry, inclusive of the 3 bills which came up, Companies Law, Insolvency and Bankruptcy Code amendments, the unregulated deposits, the chit fund which has just been presented today and so on. So on the sovereign bonds, nothing more has been done by the ministry, although yes, we have announced. And that's where it is. So there is, I'm not sure if I'm speculating on the number, how many tranches, when am I starting, none of that yet.
Ma'am, in addition to these meetings that you will have, does the government have any specific sector-specific interventions in mind?
First of all, we'll have to hear from each one of them. Like the bankers have their own set of challenges, at the same time are also coming out so openly. I'm sure Secretary will distribute some of the written material which tells you what's happening as regards credit being made available, as regards digital payment platforms and so on. So many items on which you will get written statements. But the essential idea behind these series of meetings is to hear from them and fairly quickly after that come up with something which will help those sectors which are giving their views to us.
Do you think the current economic environment is worrying?
I don't want to go into classification which you want to do it that way. We are feeling the inputs, we are getting the inputs from various sectors and trying to respond so that confidence of those sectors is being restored.
Revenue Secretary is also here. There's a taxation issue which the banking industry is grappling with. Has some solution been found for that? The levy of GST.
Which is the one?
Levy of GST.
Wait.
Levy of GST on the services, some of the services that are offered by the bank.
I'll have two things in two different silos to answer that question on. One, the ministry, within the ministry, with all the secretaries present, and incidentally, I'm sure all of you all know that my day starts every day with meeting with the secretaries, a half-an-hour meeting, if necessary beyond half an hour, wherein the company affairs secretary and also the chief economic advisor also joins in. Once in a week, which is ideally on a Friday, the DGFT and also Secretary Commerce will be joining us. They were expected to join us last Friday itself, but because they are out on a multilateral, plurilateral trade negotiation, they couldn't join us last Friday. So this meeting with the secretaries happens every morning, and in one such a meeting, or probably extended to a second meeting with the secretaries, all with me, we have discussed this issue of taxation of the banks and the services that they provide through their various portfolios of accounts that they hold. Even as we say this, I think I'd like to repeat the Jandan accounts and the BSDS, the basic deposit and savings accounts don't have any charges on them. But it is beyond that, that when a bank looks at classifying its own various different accounts under different categories, that this issue comes up. So this has been fairly elaborately discussed. Today, I have the Chairman State Bank here, Deputy Governor Reserve Bank here. Today what we have asked the banks to talk about, they did speak elaborately about it. They've all agreed to reply to the notice which has been issued by the government, by the taxation authorities. Once the replies come, I know the matter has already reached the court, but once the replies reach us, I'm glad that they all have agreed to send us the reply. Once the reply reaches us, Secretary Revenue can have a look and all of us will apply our mind and take a call from there.
Various industries have raised concern on the economy. How do you respond to that?
I've not heard them yet. I've invited them to come and speak to me. Maybe I'll respond after I hear them.
But publicly,
that's all right. Publicly, through the media, there's a lot happening. I'm fully seized of what is being generated in the media, through the media, by the industry. But I've invited them. So post their coming here and having a one-on-one as we have had today with the bankers, I'll again meet with all of you. One thing which I want to tell you, you are also going to have enough work with me, because after every such consultation, we'll be meeting you. So that question will become comprehensively answered after I meet with the industry.
Ma'am, there is one issue about the transmission of policy rate.
Yes, it was discussed today.
So what is the way out? I mean, any thinking from the government side?
No, today's thinking is only hearing them out. So when I come back to you overall, after meeting with all the sectors, maybe some view from the government will come that day.
Ma'am, since there are concerns about the general economic slowdown, have you, in your meetings that you are holding every day with the secretaries, been able to, see what is the impact that the slowdown is going to have on the budgeted collections? Also, we have seen how corporate tax collections in the first 3 months haven't been, as rosy as you would want.
On the tax collection.
And the expenditure dipping in the first quarter.
And anything else? On the tax collection, I want Secretary Revenue to give in his bit, and I will certainly give you my thoughts on it. It's certainly something which the ministry has spoken. But before I give the floor to Secretary Revenue, the ministry is observing keenly, collecting its data sector.
All right, some important flashes coming on from there. Amongst 2 or 3 things which stood out. I mean, one, of course, SEBI started the consultations with stakeholders on the public shareholding norms on the 25% to 35%, but nothing beyond that. More importantly, and something that I thought was interesting, reiteration that want to make it absolutely clear that the government is ready to hear out FPIs facing issues. The stock market representatives are going to meet the government, and the economic affairs team is going to meet with FPI representatives. So from a market perspective, this is one important announcement that has come in. Now keep in mind that this is now twice in the last 2 or 3 days that we've heard talks about the market or the government willing to hear out the pain points of stock market participants. That should potentially be a booster. Had it not been for what China has done or the PBOC's done, not will have a bit of a reaction. Just to keep our viewers abreast, before we get in the top trading ideas from both our experts, Europe should come up on your screen, Dow Future should come up on your screen. The world is not a very happy place, so you might well think that these statements are positive and therefore might be worth looking at positively. But the European markets are down, for now at least, and the Dow Future should come up on your screen. In the morning, they were down about 1%. As things stand, I reckon that they should still be lower. Yep, down about 1%. So the world markets are not a very happy place. However, top closing strategies from our experts. And to you first, Hemen, your top closing strategy.
IndusInd Bank at 1398, 10 rupees stop loss, 20 rupee target.
No, is it a long or a short?
Long.
Okay. Long and IndusInd Bank. Okay, just that spike that is coming in. Hemen is going out and going along there. Ajit, what about you? Your top closing strategy?
See, Neeraj, we are seeing IT holding well, and Tech Mahindra, I feel, has potential to test 670 marks. So one can definitely go down at the current levels with 635 as stop loss.
Okay, Tech Mahindra also, by the way, at day's high. Bharti Airtel is up now 5% in trade. It's sitting at a day's high. And of course, the IT pack has been doing well. TCS Tech Mahindra, also one of your top gainers, and HCL Technologies also sitting with gains right now. Let's go across to Yogesh Mehta of Yield Maximizers. Hi Yogesh, hope you're getting our audio now. Just a very quick question. What are you advising your clients at lower levels now? Nifty also breached the 10,800 mark in today's trade.
Yeah, Navneet, good afternoon. Definitely, yes, from current level where Nifty has corrected now 10%, almost 10,800. So it seems that with all the pessimism in place and even the results, Q1 results are majorly out and yet to come out in this week. So probably I would say that yes, definitely one should get into the positions for the long with these prices at the corrected prices where the numbers are very much there and consistent earning growth is visible. Even if not at 30%, but at least with the 15-17% growth rate, it is very much fine in this kind of a scenario. Then definitely one should start deploying money into select few names where definitely yes, with the leaders of the sector, but of course, and then gradually can keep on adding more, because I don't foresee that even from 10, it cannot go down to 9,500 or 9,000 level in the near future unless and until there is a trade war situation intensifies. So I would say yes, definitely investors should start looking at going long positions even for the short term from current levels.
Okay, Yogesh, if this is the time to deploy money, share one stock with our viewers which you would be recommending now at these levels.
Yeah, sure, Navneet. If anybody would like to go for that, then definitely HDFC due to FPI surcharge, and that's a darling stock for the FI. And the earning numbers which are there, which have come in line with expectation, there is no damage to the asset quality, and the strong parentage is also there. That is backed. And I would say that at the current price of 2150, 2160 odd, one can look at it, and 2350 was the all-time high. It has corrected hardly 10%. So again, that will give a good opportunity. Even the same HDFC Bank. Now, due to this FPI surcharge, it has fallen from 2,500 odd level to 2160, 70 today, and currently must be 2180 somewhere. So these are the two twins which are likely to bounce back more potentially than any other stock in the galaxy. So these would be the ideal one can get into for short-term opportunities.
Okay, Jaman, stay on. We'll take in final thoughts from you, but let's start wrapping up the markets. A bit of a late surge helping the markets a little bit, but let's see if this lasts. So 1.2% off the lows of the day, if that's any solace, but the bank's still down about 550 odd points. Let's see if this proves to be a near-term level from where the markets could maybe rise a little bit. Difficult to say that. Mid caps and the small caps will come up on your screen as well, and I think those two took a bit of a stick, though the mid caps are a lot more well behaved. I doubt the market breadth will show it, but 1.34% cut is something that we can live with almost on any given day. Small caps though were down about 2%, very similar to what the bank Nifty did. Let me talk about the large caps first and what's done well and what's not. Now, even on a day like this, you've had some good movers. Bharti at the highest point of the day up 5%. Tech Mahindra about a couple of percentage points. TCS 1.5%. HDFC strong move, 1.5% higher in trade. Bajaj Auto, IndusInd Bank, Cipla, a few names which are doing rather well for themselves. What is not doing well? Yes Bank 8% lower. UPL a slam dunk in today's session, down about 6%. Tata Motors 5.5% now, slowly moving towards that 100 mark. Power Grid, Grasim, it's been taken to the cleaners the last few days. Grasim along with Vodafone Idea, and Reliance Industries is that big drag along with Kotak today. So Nifty management or otherwise, HDFC Bank doing okay, the others not so much. But the broader on the spectrum, a lot of stocks with pain. Some with pain have recovered as well, the likes of Care Ratings. Now, interesting mix of stocks today.
That's right, Neeraj. And there were a couple of results reaction also. So let me start off with Venky's, which shot up post its first quarter numbers today, where the revenue surged nearly 20%, and the gains were quite visible. 14% high here for Venky's India, closing around the day's high mark. Magma FinCorp, now this one touched its 52-week low in today's trade of about 63.4, but from those lower levels, it did recover quite sharply in trade and finally closing with gains about closer to 8%. Good set of numbers coming in from Bata India. There was gross margin expansion seen, and the street gave thumbs up. Even in a weak market, you saw the stock surging 4.5%, and buying was seen both on cash and long positions was seen on the future side of Bata India. Strides Pharma bucking the trend. Last week, this counter was up 11% in trade, and today also it went up 1.5%. Finally, the closing is coming around 398.5 for this one. And Nestle too came out with the numbers, decent set of numbers, bottom line, top line growth between 10 to 11%, and the stock did see positive moves post the numbers, 3% higher for Nestle India. On the losing side, Gati continues to be under pressure. This one was locked in lower circuit with cuts of about 20%. Sadbhav Infra has been falling every single day. Today it touched its fresh 52-week low, 8%. Some bit of recovery definitely seen in last half an hour of trade, but still the losses were there. HDFC AMC came under selling pressure today. The stock fell about closer to 4 to 4.5%. And you also had stocks like Kaya, which came under severe selling pressure. The stock fell about nearly 11 to 12%. It did have a gap down opening though. Diwan Housing continues to reel under pressure, fell about 10 to 11% in today's trade. And Motherson Sumi recording 52-week low every single day. The stock was down almost 4%. And small finance banks like Equitas, that one was weak, down 9% in trade. NBCC fell about 11 to 12%. And Jindal Steel and Power, this is the other stock from the steel space, which has been touching fresh 52-week low. And look at the closing, almost at the lowest point of today at 111.8, Neeraj.
Well, so that's the order of the markets today. We've off the lows of the day, if that is any solace, but the Nifty Bank still got about 2%. I want to bring up what the volumes have been in the session today. It would be interesting to see if indeed the cash market volumes have picked up. Actually, both cash and F&O, first day of the week. That's not a bad number at all. You could argue that cash market volumes are lower than what we did in Friday's trade, but that's okay. Still, 32,000 crores. Off late, the last few days, we've had higher average volumes on the cash side, NSE cash, as compared to what was there in the better part of the month of July.
Yes, it's been in that range of about 30 to 33,000 crore in the last 5 to 6 sessions. Let's just pull up the India Volatility Index, which was up 25% yesterday, and today's move would be owing to the global factors. So closing at elevated levels of about 16.5, and also the contributors list on the Nifty, which were the stocks which dragged the index lower. Not to be surprised, Neeraj, Reliance tops the list there.
Yeah, and HDFC Bank, Kotak Bank, it's just all the key names that people have bought in the recent past which are getting sold off. Look at the list of gainers. Save for HDFC, Bharti Airtel is not being amongst the top buying list, Tech Mahindra not there, but those are the stocks that are finding some buying, if at all. But the key names are actually seeing selling, and the market breadth will of course be negative today. The extent, I do not know. Well, it started off weak and has stayed weak. You could argue they're a bit narrower than otherwise, but still about 1:3 in favor of the decline. So not the best of days. Anyways, final thoughts from our experts. Yogesh, before we thank you, you spoke about stocks that you would buy. Just one quick word on Reliance Industries.
I would still avoid Reliance Industries because we had that conversation during the results, because the main business is on the sideline and Geo and retail are picking up. So probably, but I would say that probably debt would be a major concern. And I would say that though it has corrected sharply from those levels to 10% but still downside seems to be open right now. So would not touch that stock right now on the buy side.
Okay, Yogesh, we'll let you go on that note. Thanks a lot for joining and sharing your views with our viewers. Hemeen, let me come to you. Your closing thoughts. Let's say if you open flat tomorrow, is there any trade that you would take on the index?
It's showing 6% addition in Nifty, 16% in Bank Nifty. We all know it's a fallacy, so we'll come to know the real figures when we, expect the genie to pull it out of the hat, assuming we get it before 9 o'clock. But yeah, if that is the case, it's a small positive. But I still feel that there could be some more adjustment left, a day here or two there maybe. So I'm not very comfortable going long in futures. I don't think there's a very big downside left now, but I haven't seen a reversal signal yet. And I think like what Neeraj said, I think it'll just come with a surprise out of the hat.
Okay, Ajit, your closing thoughts, key levels to be watched out for tomorrow would be?
See, we expect this that the trade which we initiated in the beginning is to continue, but Bank Nifty could just derail this entire thing. So one should be very cautious when it comes to Bank Nifty, and 27,700 it should hold. In case if it fails to hold, then yes, this uptick which we are expecting in the Nifty might go for a toss, and we'll see further consolidation prior to any uptick.
Okay, Bank Nifty, however, on the future side, there was a lot of build-up seen in today's trade. On that note, I would like to thank both our guests, Ajit as well as Hemeen. Appreciate both of you joining us and sharing your technical views on the markets with our viewers. Well, on that note, it's a wrap on this edition of Countdown. Goodbye from Neeraj and my side. Thanks a lot for watching, but stay tuned to Bloomberg Quint. Market Wrap comes up next.